what we mean by classic dovish rate hike. Okay, so over here you can see that they say that they increase interest rate to 0.5%. Okay, the main purpose, the main motivation behind this rate hike is actually try to maintain low inflation, because inflation has been rising, well, not only in New Zealand, but across the world, right? So in an attempt to actually, push inflation down lower, okay, they have to increase interest rates, all right? So yesterday I actually mentioned that one of the more important point to look out for is whether further interest rate hike will still be in discussion. All right. So see over here. Okay. So this sentence over here, the committee noted that further removal of monetary policy stimulus is expected over time. Okay. So they are still expecting, interest rates to be hiked over time. Okay. With future moves contingent to the medium-term outlook for inflation and employment, meaning they're still going to, based off their outlook, the central bank's outlook on the New Zealand's inflation and employment, all right, for the medium term, before deciding if further rate hike is warranted. All right. So now, regarding inflation and employment, okay, you can see from over here. Okay, thank goodness. All right, the current COVID-19 related restrictions have not materially changed the medium-term outlook for inflation and employment since the August statement. So back in August, they actually released these quarterly projections, and ever since the recently imposed restrictions across New Zealand, okay, the market was actually worrying that the next time round, when the central bank releases their quarterly projections, they may actually revise it downwards. Okay, but nonetheless, fortunately, over here they say that this recent restrictions have not materially changed the central bank's medium-term outlook for both inflation and employment. So with that, okay, personally, I would say that further rate hikes are still on the table. Okay, are still going to be in discussion. All right. So the next meeting will be on 24th of November. Okay, and if I'm not wrong, I read somewhere that market is starting to price in a rate hike for the during the next meeting in November. Okay, so yeah, so we can actually look forward to more rate hikes coming from the New Zealand Reserve Bank of New Zealand. Okay, now back to the classic dovish rate hike. Okay, let me just show you guys the chart.
So while he brings up the chart, remember, first heard here, next rate hike in November from Kim Hong. Projections are done. Take note of that. Put it in the calendar.
Put it in the calendar. Don't worry, I'll remind everyone when the day comes. Okay. Okay, so what you're looking at right now is the M1 chart, okay, for New Zealand dollar. So the Reserve Bank of New Zealand hike interest rate, which is actually a good thing, right? So we see, so we can actually expect appreciation, a strengthening of the New Zealand dollar, all right? But okay, because this is a dovish rate hike, like what I mentioned yesterday, previously during the August meeting, okay, the RBNZ, they were actually considering a rate hike of 0.5%, okay, meaning this time around, well, at that time, okay, they were supposed to see interest rate to be at like 0.75% already, okay, but because Governor Hawkesby, Assistant Governor Hawkesby's comment of central banks around the world are actually hiking interest rates in denomination of 0.25%, that actually sent a dovish tone across the market, okay, hinting that the central bank may actually be increasing interest rate by 0.25%. So that actually causes the dovishness, the more pessimistic view coming from the market, okay, in terms of a rate hike. So as you can see from the chart, all right, this yellow dotted line over here, this was actually the time when the announcement was made, all right, the hike rate announcement was made. So for the next 1, two, three, four, 4 minutes or so, we actually see green candles, okay, bullish candles. The New Zealand dollar actually rose by 26 pips, okay, which actually moved according to the action, right? The rate hike action. But then after that, okay, you actually see a depreciation of the currency, like within the next 5 minutes or so, the gains will just return back to the market, all right? The gains will just return back. And then right now we are seeing a way lower price than where it actually started, right? It was actually all in all, there was actually like some 50 pips decline from the top. So this is what we meant by a dovish rate hike, okay? When the announcement is being made, okay, the initial response is positive because it's a rate hike, right? But because of the underlying reasons of, the expectation that the initial expectation that the central bank is supposed to hike 0.5, and now they are actually hiking only by 0.25. That sort of like causes a disappointment, right, in the market, right? And that was what led to the further decline, the further depreciation of the New Zealand dollar. So if we were to look at other charts like New Zealand yen, we see similar movements, right? For the first 4 minutes, it's strengthened by some 27 pips, and then it starts coming down. Subsequently, even for the New Zealand francs, okay? So why am I showing you guys only these 3 charts is because the USD, the Japanese yen, and the Switzerland francs, all of them are safe haven currencies, okay? So, when there's a rate hike, when the central bank is hawkish, there tend to be a strengthening of the currency against safe haven currencies, okay? But then because of the dovish rate hike, okay, we can see that, this whole dovish rate hike illustration becomes clearer, okay, when we look at the currency against the safe haven currencies, okay, the other safe haven currencies. So as for other currencies like Australian Kiwi or Pound Kiwi, Euro Kiwi, and things like that, it really depends on the other currency as well, okay? So, which is why I show you guys only these 3 currencies to better illustrate what I'm trying to say, okay? So with that, yes, we will be hearing from the Reserve Bank of New Zealand again on 24th of November. Yes, 24th of November. Yeah, personally, I'm still going to expect that the central bank will be rising interest rates as of now because the COVID cases, yes, it's still rising, right? But, as of now, they are still, it's still pretty much under control, okay? Some sort of under control in New Zealand, okay? So hopefully things will turn out better, okay? Turn out better, and we'll see what, the central bank thinks as the meeting draws near, all right? With that, I will hand it back to Scott.
So Kim Hong, there's a question, long-term sense, New Zealand dollar to weaken due to dovish hike, or is it just a short-term decline? What do you think?
Short-term decline for now, because like I said, for example, let's just put in some scenarios over here, all right? If let's say the whole COVID situation would turn out better than expected, okay, maybe say by the end of this month, maybe New Zealand has already eased all COVID restrictions, all right? And we see a strengthening in the economic indicators in New Zealand, okay? Then there is a chance, okay, that the RBNZ may actually be hiking interest rate more than 0.25%, right? If that were to happen, okay, then, it would change the whole, I wouldn't say the whole, but it would change the direction of how New Zealand dollar will be moving, right? So this dovish hike, okay, personally, I'll just keep it short term. Short term, probably until the end of this month or something, all right? Yeah, if you guys are trading cross pairs, just also, yeah, like I emphasized many times, pay attention to what's happening, what's going on the other side of the world, okay, for the other currency, okay? If you're trading pound, the whole post-Brexit tension, between Europe and UK is still ongoing, that kind of thing, trade and things like that. If you're trading against Australian dollar, note that the Australian dollar is not doing that well as of now as well. So, are you going to sell Australian dollar? Or are you going to sell the New Zealand dollar? It's a it's a bit hard to determine right now because both are dovish. So a hint here, Aussie Kiwi is
sell both.
probably the pair that you want to avoid. Sorry?
So sell both.
How are you going to sell both, right? I mean, if I'm trading Aussie Kiwi, how am I going to sell Aussie against Kiwi and sell Kiwi against Aussie? It doesn't make sense. All right. So yeah, just try to avoid Aussie Kiwi for now. At least I will. Okay. Any more questions?
No, so I'll add on to what.
Yeah, $1 million question from you. Come on.
And also Noah's question is, whether it's a long-term or short-term decline. I do agree it might probably be a little bit, I would say make it medium term. So just so that we cover all bases, make it medium term. But here looking at the charts, just before I get, Scott to go into the dollar index, the New Zealand dollar, as we spoke about it on Monday, you could have traded the news. There could have been a short-term news trade, which, if you wanted to learn how to trade or get a snapshot view of how to trade the news, we did that example on Monday where we looked at on Tuesday when we looked at the RBA news release, and I gave you the insight into how to trade the news. But for the New Zealand dollar at this point, I would say I would want it to break below this red line that I had, and I did analysis before we could see that downside move towards 68.19. So at this point, if you're looking for something to enter, probably a little bit early at this point, I would say wait a little bit more, let it break past this level before looking to sell for a medium-term kind of trade. So with that, Scott, you can go back